Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Bank of Qingdao Co Limited annual report. Bank of Qingdao Co Limited offers a wide range of banking products and services to its customers. The company operates through three main segments: retail banking, corporate banking, and financial market business. In the retail banking segment, Bank of Qingdao provides various deposit products, retail loans, personal loans, and credit card business. It also offers financial leasing, wealth management, and other services such as safe deposit boxes and letter of credit and guarantee. The corporate banking segment caters to the needs of corporate customers by providing short-term and long-term loans, acceptance, discounting, and interbank discounting of notes. The company also engages in issuing, cash-in, and underwriting government and financial bonds as agent. In addition to these services, Bank of Qingdao offers foreign exchange settlement and sales, bond settlement agency, selling of public securities investment funds, ordinary derivatives trading business, interbank lending and borrowing, and other businesses. It also provides receipt and payment, insurance agent business, and other agency services, including the sale of precious metals. The company operates through various channels, including in-bank self-service banks and self-service machines such as automated teller machines, cash recycling machines, and self-service terminals that provide a range of services like withdrawals, deposits, transfers, account inquiries, and payments. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The net income of the company experienced a significant increase from 2024 to 2025, with a growth rate of 21.61%. This rise was attributed to various factors, including steady growth in operating income and stable decrease in operating expenses. The net profit margin also saw an improvement, increasing from 33.45% in 2024 to 36.93% in 2025. The increase in net interest income played a crucial role in the company's improved profitability. In 2025, net interest income accounted for 76.03% of operating income, contributing significantly to the overall growth. The operating income margin remained unchanged at 100% in both years, indicating that the company was able to maintain its efficiency and effectiveness. However, it is worth noting that the net profit margin did not increase uniformly across all metrics. While it increased from 33.45% to 36.93%, it decreased from 13.1% to 14% in another instance. This discrepancy highlights the complexity of the company's financial performance and the need for a more nuanced analysis. Nonetheless, the overall trend suggests that the company is experiencing improved profitability, driven by steady growth in operating income and stable decrease in operating expenses. The company is generating positive operating cash flow, a clear indication of its financial health and stability. This can be seen in the numerous mentions throughout the report of positive operating cash flow, with specific figures provided for various years. On page 17, it is stated that the company has a positive operating cash flow, setting the tone for the rest of the report. Similarly, on page 37, it is noted that the company's operating cash flow is Rm 8.8 billion, further emphasizing its financial strength. The report also highlights the company's ability to generate net cash flows from operating activities, with figures provided for both 2024 and 2025. In 2024, the company generated $22,951,593 in net cash flows from operating activities, while in 2025, it generated $8,799,626. Furthermore, on page 128, the report provides a breakdown of the company's operating cash flow for both 2024 and 2025. In 2024, the company generated $9,466,664 in operating cash flow, while in 2025, it generated $6,969,370. In addition to these specific figures, the report also highlights the company's overall financial performance. On page 223, it is noted that the company has a total operating cash flow of $200,096,022, further emphasizing its financial strength and stability. Overall, the report provides clear evidence that the company is generating positive operating cash flow, a key indicator of its financial health and stability. The company's debt level and interest expenses have undergone notable changes over the past year. In terms of debt levels, the total liabilities have increased by 18.55% from RMB 645.064 billion to RMB 764.706 billion, with specific increases in debt securities issued, 23.44%, and borrowings from central bank, 72.02%. This significant increase in debt levels is evident across multiple pages of the report. However, a closer look at interest expenses reveals a more nuanced picture. While there are instances of decreases in interest expense, such as a 10.29% decrease from RMB 12,547,608 to RMB 12,122,000, these changes are not uniform and do not indicate a significant overall increase or decrease in interest expenses. In fact, the total interest expenses have decreased from 2.08% of total balance to 1.75%, suggesting some stabilization in this area. Overall, while there is no clear indication of a significant change in interest expenses, the company's debt levels have increased substantially over the past year. The performance of various segments and regions in the financial industry can be gleaned from the extracted summaries. Notably, certain areas excelled while others remained unremarkable. In terms of specific products, corporate banking's Easy Campus Financing product for the education sector stood out as a success story. This indicates that targeted offerings can yield positive results. Transaction banking also demonstrated strong performance across two key areas, domestic markets and cross-border finance. These sectors appear to be thriving, contributing positively to overall financial health. In contrast, certain regions such as Shandong Province and its cities like Jinan, Yantai, Weihai, Liaocheng, and Qingdao did not receive any mention in terms of performance. Similarly, retail banking and corporate banking/financial market business were also left unremarked upon. Management is optimistic about the company's outlook, citing a 12.11% increase in net interest income due to expansion of interest-earning assets and cost reduction efforts. The company's continuous growth in loans issued has led to a year-on-year increase in average balance of loans by 14.4%. Management also emphasizes the importance of market risk management and control, enhancing the overall return stability of financial investments. The company is focusing on scenario finance through new products to explore growth opportunities in personal business loans. Additionally, management highlights the bank's solid foundation for financial innovation and business development, with proprietary investment increasing by 17.57% year-over-year. The company is also investing in its business, with capital expenditure increasing by 23.1% in 2025 compared to the previous period. Management acknowledges that the company's net interest income and equity are sensitive to interest rate fluctuations, but emphasizes the importance of ensuring sufficient cash flow to meet payment obligations. The company has established a robust operational risk management framework, including 3 lines of defenses, and conducts scenario analysis, stress testing, and other measures to forecast and manage capital adequacy ratio. Overall, management statements suggest that the company is focused on expanding its business, managing risks, and ensuring financial stability. The company has a history of paying dividends to its shareholders, demonstrating its commitment to returning value to investors. A specific example of this can be seen in the dividend distribution plan implemented by the company, which involved a cash dividend of RMB 0.16 per share. This payout resulted in an aggregate amount distributed of RMB 931 million, highlighting the significant investment being made in its shareholders. The absence of any mention of share buybacks on the provided pages suggests that this is not a current or past practice for the company. That concludes the financial summary for Bank of Qingdao Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.